Views regarding the economy, securities markets, or other specialized areas, like all predictors of future events, cannot be guaranteed to be accurate and may result in economic loss to the investor. Past performance is no guarantee of future performance. Any information is for illustrative purposes only and is not intended to serve as investment advice or as a recommendation, since the availability and effectiveness of any strategy is dependent upon your individual facts and circumstances. Individual securities discussed may be held in accounts where JGUA and or its employees have a beneficial interest. And with that, let's get to this week's episode.
Hi everyone, Dr. B here with John G. Ullman and Associates. This is our weekly market update for the week of December 16th. Thank you for joining us this week. I hope that you find this video helpful and informative. And as usual, the purpose of these videos is to help leverage my background in economics to help you better understand the economy and the financial markets so you can make informed financial decisions. So with that said, let's get ready to hit the books and get up to speed on the markets. Last week was all about prices and inflation, so we'll kick things off in this video talking about the Consumer Price Index. The CPI report for November came out, and we saw a 2.7% increase in prices over the last 12 months. This is actually an increase from October's 2.6%, and it's just further evidence that our fight against inflation seems to have stalled, although there are some important components that we have to consider when we look a little deeper in the report. One of the important pieces in November's Consumer Price Index was the housing component. We've mentioned this before. Housing includes rent and owner's rent equivalent. And we actually saw those prices continue to rise, but we saw them rise at a much slower rate than we have over the last couple of years. One of the considerations is that as overall inflation slows down and rental contracts are renegotiated, new housing mortgages are put into place, we may theoretically see some of this shelter inflation start to fall in 2025. And if we do, this could continue to assist the fight against inflation, even if interest rates stayed the same. We also saw the November report for the Producer Price Index. The total index came in at 3% growth in prices over the last 12 months. Unfortunately, this is the highest rate of growth or rate of increase that we've seen in 2024 and continues to feed the speculation that further interest rate cuts may actually allow a reignition of the inflation that we're looking to combat. In addition, the core index for the Producer Price Index, which excludes volatile areas such as food and energy and trade services, increased 3.5% in the last 12 months, which is about the same rate of increase that we've seen for the last 7 months running. Further evidence that the fight against inflation seems to have stalled. This could be a good thing if we can renew the fight and continue to bring inflation down, but could be problematic if policies and interest rate cuts in the future exacerbate the problem. Last of all, as far as inflation is concerned, we also saw the Imports and Exports Price Index reported, and in this area of international trade, we saw actually very little change in prices. There was some increase on the import side of the house, about 1.3% over the last 12 months, but of course, the trade-related price indexes are more significant as we prepare for potential tariffs in the future and the potential impact that those may have. Last week, we also saw the monthly update from the NFIB Small Business Optimism Index. And fortunately, as the optimism in the economy, or at least optimism for the future, continues to grow, we saw this Small Business Optimism Index finally exceed its 50-year average after 34 months of being below that average potential. We also saw the highest value in this optimism index since June of 2021. Although small businesses are continuing to struggle to hire and find qualified applicants for open positions, they also continue to struggle with inflation in some ways. There is significant improvement as far as their optimism for what the future holds and the potential for their business and business activities. The stock market had mixed results last week, as we saw all three major indices move up and down throughout the week, and often in different directions at different times. The Dow Jones Industrial Average actually saw the most significant drop of the three indices, while simultaneously, at one point, the NASDAQ broke the 20,000 point marker for the first time ever. The yield on the 10-year Treasury continued to increase this week, although if we zoom out and look at the larger yield curve, which captures the current yield across different maturities, we see there continues to be a U-shaped curve with higher interest rates on extreme short-term securities and slightly higher interest rates on the more long-term securities on the other end. One of the big developments in the yield curve over the last week, though, and throughout the month of December, has been a significant drop on the short-term side. Although we've seen small movements in the 10-year Treasury as well as other securities, we saw a significant drop in the 1 to 3 month yields, which could indicate an increase in demand for these short-term securities, or could potentially indicate some of the movement and some of the activities of the Federal Reserve related to interest rate cuts have had an impact on these short-term securities, while most investors wait to see the developments in the longer-term maturities. Bitcoin again crossed the $100,000 mark last week, although we continue to see big fluctuations in gains one day, followed by significant sell-offs, mostly from long-term investors in the Bitcoin market. One thing that the market is currently looking for is legitimacy and stability and evidence that in the future crypto regimes, Bitcoin will continue to be a significant player. And to wrap up our update from last week, the US dollar increased in value throughout the week. Gold increased significantly at the beginning and then fell back a little towards the end of the week. And crude oil demonstrated consistent, regular gains throughout the week. Jumping into this week, of course, the big topic for this week is the Federal Reserve and the Federal Open Market Committee meeting to make their next and final interest rate decision for 2024. Currently, the markets and economic analysts are in agreement and have similar expectations that the decision this week will be another 25 basis point reduction in the federal funds target rate. Although nothing is guaranteed, the majority of the data and the majority of the evidence suggests that this cut will occur, while there is increasing speculation that the amount of cuts or the magnitude of those cuts in 2025 may be significantly decreased, possibly dropped as low as no planned cuts for 2025. One of the important pieces that we'll see coming out of this week's Federal Open Market Committee meeting is the press conference that the chairperson will deliver, and including the question and answer portion, but also the summary of economic projections that I've mentioned before that'll actually give us an idea of what the members of the FOMC believe 2025 will look like economically and the implications for those interest rate cuts. Also coming up this week, we'll see the third and final estimate for the third quarter gross domestic product. Again, keep in mind that as we see further revisions, they typically incorporate more data and better analysis. So we assume that the third estimate result is much closer, or at least as close as we're going to get, to the actual results and performance from that time period. Once we have this final estimate for the third quarter, then of course the focus and the conversation shifts to how the fourth quarter and the 2024 year, all 4 quarters, performed overall. Also this week, on top of the rest of the economic findings and data that's being released, we'll see new estimates for the Personal Consumption's Expenditure, PCE, price index. As I've mentioned before, this is the Federal Reserve's preferred measure of inflation. And although this data will be coming out after they've made the December interest rate decision, this data will also probably guide the discussion and the conversation leading into the potential for interest rate cuts and inflation in 2025. A little later in the week, we'll actually see the leading indicators index update from the conference board. This index has been in negative contraction territory for a little while, and we've seen the index fall over the last 2 months. But the last report was for October, and a significant amount of economic factors have changed in the month of November. So this report should provide some interesting insight into where the economy stood in November and help provide some insight as to what we can expect in December and beyond. Additionally, in this data-heavy week, we'll see a significant amount of housing data from home builders, from mortgage applications, to building starts, building permits, and existing home sales. In addition, we'll see retail sales data, so we can see how the consumer continues to behave and spend money during the end of 2024, as well as industrial production and capacity utilization, which will help give us an idea of what the manufacturing and what the production side of the economy looks like. This last piece is important because the most recent data we've seen has been somewhat plagued by natural disasters and worker strikes, and this upcoming report will actually be the first report that doesn't have any of these significant external factors and could give us our most accurate picture of industrial production up to this point. As we look ahead to the future, it's a bit of the usual suspects. We'll see the inauguration in January of the Trump administration 2.0, and we'll also see the beginning of this new administration's 100 days. This period is seen as significant because it typically involves a lot of action and a lot of policy declarations as the new administration attempts to establish priorities and focus for the rest of the term. At the same time, soon we'll be talking about the fourth quarter in 2024 earnings reports as companies close out their calendar year and begin to capture not only their performance in the last 12 months, but also their expectations for future performance as far as profits, revenues, and gains in earnings or earnings per share. Finally, as we close out the calendar year of 2024, we'll also see a lot of economic reports and projections on the global economy. So specifically, the World Economic Outlook Update from the International Monetary Fund and the Global Economic Prospects Report from the World Bank will be two of the major significant pieces of economic reporting that not only look at the performance and the expectations of the United States, but also all of our global trading partners and global supply chains in general. For those of you that have been watching these episodes and following these videos over the last few months, you've probably noticed that there's some repetition. We tend to see some economic reports repeated month after month, but there also tends to be a lot of new information and a lot of additional detail that we bring to you in these reports. I want to take a moment and just mention that if there's ever anything that you'd like to see addressed or that you'd like to hear more about, please know that you can always submit that in the comments, or you can reach out to me directly and let me know, and I'll do my best to incorporate it. We tend to focus on what we think are the most important or the most impactful bits of economic information, but that doesn't necessarily mean that they're always the most useful for everyone. So as we look forward to 2025, the same as everyone else, we're looking to continue to expand and improve this video and the content to make it more helpful and more useful for you. So with that said, as we move forward, we will continue to do our best to collect all of the relevant information on both the economy and the financial markets so we can bring it to you in a format that's easy to understand and easy to follow. That way you can stay up to speed on the markets. Thank you for joining us in this episode. Don't forget to like and subscribe below. Also, check out some of the other great John G. Ullman content that we put out. And don't forget to have a great week. Thank you for joining us.